This is Craig Haugard with your Financial Issues Ag Update. Well, the corn market struggled with a lack of fresh supportive news yesterday. Last week, the USDA pegged planted corn acres at a whopping 97 million acres, but it really feels like the trade is probably trading something more than that 92 to 94 million number. On the demand side of things, we're seeing increasing concern about herd liquidation in the livestock sector as a result of plummeting prices, while the coronavirus and sharply reduced energy costs are putting a lot of hurt on ethanol. On the positive side of things, we did have much better than expected weekly export inspections. They came in at 50.1 million bushels. And as I record this, the overnight spot corn futures are trading 2 cents higher. Concerns of dryness in Brazil and Argentina propelled beans to a higher close yesterday. Dryness in Brazil has some analysts suggesting the crop could go from the current USDA estimate of 126 million metric tons down to 122 million. It's expected that Argentina's crop will also be reduced by the ongoing hot and dry weather conditions. Weekly export inspections were not supportive as they came in at 11 million bushels, but in the overnight trade we have spot soybean futures trading up a nickel. The wheat market was propelled higher by dryness in the Black Sea region and cold temperatures throughout the U.S. Southern Plains area this week. Disappointing weekly export inspections of 11.8 million caused wheat prices to back off from their highs of the day, but they still finished stronger. After the close, we received our first weekly winter wheat crop conditions report. That winter wheat seen as 62% good to excellent. That's up from 60% at this same time a year ago. In the overnight trade, Chicago is 9 cents lower, Kansas City is down 6, and Minneapolis is 4 cents lower. Cotton futures posted their third consecutive higher close yesterday. May futures actually putting in a key reversal formation higher on the bar chart as they closed up 207 points, settling at 53.05. The crop progress report indicated that 7% of the cotton crop has now been planted. In the overnight trade, we have spot futures trading 15 points higher. Livestock futures finally showed us more black ink than red yesterday, just as things had a generally positive close. June live cattle futures did close down 55 cents, while the more deferred months were higher. But feeder cattle futures had a positive day, with May feeder cattle closing up $1.20 for the session, and lean hog futures were also a little stronger, with June futures closing $1.32.5 higher. Class 3 milk futures continue to struggle, with the May futures down 35 points to settle at 11.83. We have an absolute mess going on in dairy right now. Well, some stores apparently are limiting the purchases of milk, and dairy farmers, on the other hand, are dumping milk because processors don't have enough room for it. In the overnight trade, we do have spot futures trading 48 points higher, so maybe there is a little bit of light at the end of this tunnel. Cash livestock markets were split yesterday, with choice beef boxes 39 cents lower to close at 230.05, while selects were 81 cents lower as they settle at 215.03. Pork carcass values were 32 cents higher as they closed at $57.69 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.